forget. So we'll start with you, big skipper. So do you have any trade you would like us to review? So maybe while we're talking about that, I can remember those that have gone in my mind. Okay, yeah, I said I will explain BTC, the BTC sell. I posted on the channel. Let me try to highlight it. So if you're on the channel, you should be able to see it too. Can you guys hear me? Please, if you can hear me, indicate in the chat because it feels like I've been talking to myself. Okay, okay. So I said anyone can share their question. Just uh, unmute yourself. Just one person, unmute yourself and let's discuss any trade you've born in your mind, or you had in mind. I'm looking for the BTC. I want to highlight it in the group so that we can also talk about it in the channel, I mean. Okay, yeah, I've seen it. Okay, so let's just start with the BTC, okay? So you guys have heard that TradingView has added derivative pairs like volatility and co. So you can now see volatility 75, V75, V10S, and so on. You can see it on TradingView.
Yeah, I heard they were recently released. So
Yeah, so update your app and because I'll be dropping trade ideas on synthetics too. So okay, let me search Bitcoin. So BTC. I think that was on 1 hour or 4 hour time frame. Can't quite recall. Okay, I've spotted it. So yeah. So here, this particular area, the trades presented here about 2 weeks ago. So yeah, so many guys
yeah,
were calling the
because
trades. I saw it on Twitter. So I was actually moved to take the trade, but I was actually moved to take the trade, but I decided not to after taking a few precautions. So when you look at this on 1 hour, it's very clear that there is a high here and price took out that high, thereby forming a sweep, right? A break of structure to the downside. And obviously you have liquidity, right? So all this is liquidity. So you expect price to return back into deep premium and sell downwards, okay? So this is the normal ideology. This is the normal what we trade. So, and also based on where price was coming from, I I wanted to take the trade because it looked like a reaction. So on higher time frame, you might see this, you might see something like this. On higher time frame, you might see this and downward. So most likely this will appear as probably a POI or whatever. and you want to trade maybe a reaction here. So it made sense why most people wanted a trade there. So, but looking at this on 1 hour time frame, it's quite okay. It looks very, very sharp. Yeah. The liquidity, yeah. But when you move to 4 hour, you start to see that there is an inconsistency in the setup. Okay. So look at how the liquidity suddenly changed and became inconsistent. Okay. So when you apply the higher time frame superiority to this, if you go to um time frames like 8 hour, 5 hour, or 6 hour, this liquidity will totally disappear. It will no longer be here. So this, you now have this on higher time frame. This is what you now have, including this 4 hours. So the liquidity has become obscene. It's invalid. Okay. So this, and if you are my student joining here, you know that I've already taught you that when there is a sweep and a break of structure without liquidity, your protected high, if it's in a sell scenario, your protected high is no longer protected, okay? It becomes an inducement liquidity whereby you expect price to take it out, okay? So a lot of people expect price to sell here, but there is liquidity on this high. It's called inducement liquidity. Why? Because based on the higher time frame superiority, your liquidity disappeared. So what does this tell you? On lower time frame, you can have complete structure. On lower time frame, you can have this, okay? You can have this on lower time frame and expect your sell, right? But when you go to higher time frame, your liquidity can actually disappear. This is a concept that I've taught for almost 1 year since I talked the first time I talked about higher time frame superiority was in in June 2025, and this is almost 1 year. I've been teaching this one thing, explaining this one thing over and over, and traders still fall for it. So I don't want you guys making this type of mistakes again. Okay, so when as long as so let me explain how you should always apply it. Like if you've watched the February session, you see that's on YouTube. You see that I I I gently and diligently explain higher time frame superiority and the time frames and where you should check. Okay, so if your trade appears as a sweep, a break of structural liquidity on 1 hour time frame, when you go to 4 hour time frame, as long as you see the sweep there and the break of structure, or even see price crossing below that line on 4 hour or any other higher time frame, it means that that market structure is displayed on that time frame. Thereby, every rule of structure and liquidity must apply on that time frame. If not, the trade is invalid. What do I mean? Example, I have a trade on 1 hour time frame. I see a sweep, right? A break of structure to the downside, liquidity, and I'm expecting my sell here, right? Now I move to the 4 hour. Okay. When I move to the 4 hour, I didn't see a sweep. For the fact that I didn't see a sweep on 4 hour or 3 hour or 2 hour, which is a higher time frame than 1 hour, it already means that I am going to be using 1 hour to determine if my trade will hold or not. Why? Because my trade is not displayed on any other higher time frame. So the highest time frame showing that trade is 1 hour. Okay, so every of my rule will apply on 1 hour. But when I move in a scenario when I've moved to 4 hour and I see a sweep, okay, and a break of structure, for the fact that I've seen this, even if it's not a complete break, even if price just took out this transactional liquidity here but has not formed a break, as far as there is a sweep and price went below this place, every other rule must apply. Why? Because I must now see a break of structure full and I must see a liquidity. That's higher time frame superiority. Why? Because this is no longer the highest time frame displaying that trade. This becomes the highest time frame the moment I see this. So what should I do? You must ensure that you also have this and this on that time frame before you consider that trade complete. If not, then you might actually hit your stop loss. So that being said, I hope you guys understand why BTC failed. So indicate in the chat if you are clear on this. So this is what you should see, not this. Okay. So this is this. This okay guys, I'm sorry. My network actually booted. So all right, welcome Ashad, welcome. Good evening. So I don't know if were you guys following.
Yes, was we're following. We're following.
Okay, so what was the last thing you heard? I said this is different from this. I let me share my screen again. Okay, it should share.
Okay.
So, like I said this is what you need to see. Okay, this is what you should see, not this. So this is why the trade failed. So on 1 hour, this can actually appear like this because the microstructure here will show well, but when you move to higher time frame, it becomes exposed. You can now see that yes or no, is this a complete structure? So if that is understood, please indicate in the chat and we'll go to the next one. Uh, okay, guys, since most of you, okay, so what if there is no sweep for QMR? But inducement is there? Can we use demand or supply? So, all right, Ashad, what you mean is this: when there is no sweep, but there is this, right? This is what you mean. Okay, actually, this works for most people, but I do not trade this. The reason why I employ sweeps is that when there is a sweep, okay, when there is a sweep, the initial liquidity on this side is taken out, okay? So when you see a sweep and a break of structure, it actually tells you that, yeah, price wants to go this downside or price wants to go towards this downside, okay? So that's why you need to see a sweep and a break of structure. So I prefer it to the traditional demand and supply that um there are most guys or that some guys take. Okay. So when you see a sweep, it actually tells you that okay, some liquidity, some transactional liquidity on this side has actually been taken out initially. And price breaking to the downward side after doing that tells you that yeah, price really wants to go this way. Okay. So you definitely want to wait for your liquidity to be formed and then you can move. Then sometimes on much higher time frames, when I just have something like this with liquidity and on this demand area, instead of directly taking a trade from this POI, sometimes I just, if this formed on the daily time frame, sometimes I just move down to 1 hour. Okay, so when price has hit my POI on 1 hour, I just wait for price to form the usual QMR pattern. Okay, and I will take the normal 1 hour trade instead of chasing this huge on certain RR on daily time frame. Okay, even though I do not have a sweep, I might just go for a reaction trade on the lower time frame. Okay, so I think it's better to apply it this way. And a sweep tells you that a sweep and a break of structure to the downside tells you that, yeah, price really wants to go this way. Remember that a break of structure must be seen. Candle break of structure must be seen. And another aspect of higher time frame superiority is that of break of structure, because sometimes you might see a break of structure on 1 hour time frame, but you go to 4 hour time frame and you see a sweep and the break of structure is just a week. Mind you that most likely that trade will fail. Okay, most likely it will fail if the break of structure is a week. Price taking liquidity by a week actually tells you that price doesn't really want to go there. Okay, that's the significance of price sweeping a low or a high with a week. So ensure that you have body break of structure. So that's that. Which other stuff would I? Okay, example of a reaction trade. Although I didn't take that particular one, I think was on silver. On silver this month. Yeah, somewhere here. Yeah, somewhere here. Though I didn't take this particular trade for just one reason, and still it played out. So let's go to 1 hour time frame. Let's see what happened here. Okay. So here it's actually a reaction trade. I've I've talked about reaction trades before now, but let me just say a little thing about it again. So here on 1 hour time frame, you can see this low, okay, and price swept this low and provided a break of structure. Now, this is another secret that you should know. Even though there is no liquidity, price can actually come back into your POI and form a trade. Okay. But now, when price forms that trade, which is this, you do not go chasing. When price forms this trade, you don't go chasing this RR. You just target the new trade formed, and that is your trade. I don't know if this is a bit confusing, but let me go over it again. So as you can see here, there is a sweep here, a break of structure, okay, but no liquidity. Now, with confirmation on this type of trades, the confirmation is not called a confirmation entry. It's actually a reaction, okay? Why? Because no liquidity. If it's a confirmation, that means you are confirming that price really wants to move upwards and you want to take your trade to the upside or target the external liquidity. But now, having no liquidity on the main structure, you just want price to come into your premium. As you can see, I divided with my Fibonacci. Taught you guys how to measure with the Fibonacci in the last session. So you can see that my sweep is in the 50%. And I also let my reaction be formed when price has hit the 50%, telling me that, yeah, price is actually in deep discount. Okay. And I waited for what? A sweep, a break of structure, and a small liquidity. Though I didn't take this trade because of just one reason. The liquidity was a little bit far from the 50%, just here. So I was contemplating. I wasn't so I wasn't so into it. So, but it actually played out. There was a buy there. Okay. So same thing might apply here. So if you look at this structure, you see that on 1 hour here, I have this QMR. I hope you guys know how to mark out QMR POIs. So I have this sweep here. I have this sweep, okay, and break of structure, but there is no really a liquidity here. So some of you might want to mark this as a liquidity, but I warn you that this is not liquidity. Go to 4 hour time frame and it disappears immediately. This is not liquidity. or even daily time frame. Okay, so this is a sweep, um, break of structure, no liquidity, but there is a QMR. So what will I want to see? I will want to see price come into this POI like this, and then create a sweep, right? A break of structure, liquidity. And the moment I see this, I know that, yeah, this is my go ahead. I just take a buy from here and target this high. That's all. Okay. So this particular session will soon end. I'll try to send another link if possible. So this is it. So this is how to take a reaction trade. You see much more similar to this, but this one played out on 1 hour time frame. Meanwhile, this is on 4 hour time frame. So your reaction trade for 4 hour can come on 15-minute time frame, can come on 30-minute time frame, can even come on 1 hour, 2 hour. Okay, but at least 15 minutes standard to be sure that, yeah, this is strong structure, or 30 minutes for 4 hour structure. So is it clear to you guys? Who is this? Is it clear to you guys? Asha, did I make it clear?
I was understanding until my network went off. But I shall understood the last part for
Okay,
the
okay,
confirmation 15 minutes time frame.
okay, all right. I'm trying to I'm trying to get to this guy that asked the initial question. Is it Assad? Assad or Ashad? Assad. All right, guys, we'll just move on. So next trade. What? Okay, yeah, he's understood. All right. So which other trade? Okay, let me show you another example of sweep without liquidity failing. US oil. So let's go to daily time frame on this. So I had this on daily time frame. Okay, I marked this out on the channel. So there is a sweep here, a break of structure, and as you can see, this liquidity is quite far from the 50%. So you wouldn't want to take a direct buy from here. So I posted this trade, but I said wait for confirmation on this trade. Had it been a good confirmation entry came on this trade, yeah, it would have been a proper buy. So you go to 1 hour time frame, you want to see a confirmation entry on 1 hour time frame. So as you can see, I already marked this and was waiting uh, for price to print a sweep, but nothing here. So the POI would be on 4 hour time frame somewhere here. Okay. So the moment price hits this POI, you want to see this. You want to see this form, something like this. Break, liquidity, and then this. So this is it. And also price hits another POI here. And I'm trying to see if price can give me a good reaction. So the best thing to do is always, when you are not sure of the structure, always go for the lower time frame entries because it gives you more precision, gives you an easier target to achieve. Don't go chasing the market. Okay, you just take, because you see this, you just take an impulsive buy. Actually, to give you some profit, but in the blink of an eye, this will just fail. Okay. So I've studied these things, I've backtested them. I know which one works and which one doesn't. So might actually be taking impulsive trades. And it will be working for you maybe once in 5 times. The other four you will take losses and you'll be wondering, what's the problem? That's very, very, very bad. Built of change of character, just the formation of piano. No. Zoom user. No. This isn't what I said. Okay, I'm coming to that again. I'll talk about it again. Meanwhile, Asad, you said during confirmation, do you wait for change of character or just the formation of QMR? Yes, I don't wait for change of character. Just the formation of QMR is enough. Okay, the formation of QMR is enough. Just you just need price to. Okay, let's say you have this. This price has been moving uptrend, 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 uptrend. Okay, and you spot this sweep, break of structure, liquidity, blah blah blah, and price comes back here. And the moment price comes back here, you spot on lower time frame. Maybe this is on daily time frame, and you go to lower time frame like 1 hour on your POI, and you spot this on your POI. Okay, so there's no need to wait for price to break any other high that was formed around here. You just want to see this pattern complete. Okay, the moment this is complete on your POI or price has taken liquidity, falling into the 50% of your Fibonacci, telling you that price is in premium. Okay, the moment price is here on your POI. Okay, so once you see this formed, you want to take your long position here now. You want to take your long position here. Okay, so this is with your stop loss below the low. So this is it. So no need for any other application, change of character, BMS, whatever. As long as you see your sweep, a break or structure using the body and proper liquidity formed, yes, this is okay enough to take the trade. You can watch the February videos. I explained this enough using GBP card. So visit my YouTube. I'll be uploading this video by probably tomorrow if I'm spaced. I should upload this. So visit my YouTube and try to watch the other videos. I've explained this concept a lot. Yeah, on Dave, I'm coming to you, Victor. When we share the next link, so let me use the 2 minutes to talk to Zoom user. And when I share the next link, we can look at maybe some synthetic pairs. So Zoom user, I wasn't trying to say that whenever you spot a structure and it's not on the next higher time frame that you should leave it. Okay, what I'm saying is if you already have structure on lower time frame such as 1 hour, right? You have this on 1 hour. You are seeing this buy. Your mind is that as price returns here, you want to take a buy and continue, right? Now, how do you confirm higher time frame structure on this? Now, imagine you go to 4 hour and instead of seeing a complete structure like this, you see something like this. Sweep, break of structure, and no proper liquidity. You are seeing something like this. Now, this tells you that this liquidity here is present on 1 hour time frame, right? But it's not present on 4 hour time frame. Why? Because probably it's just maybe microstructure, not doesn't have any real relevance. It's just microstructure. So now I've told you guys, if you like people that are part of my mentorship, I have taught them about the types of liquidity. So when you see a sweep, a break of structure without liquidity, on a normal circumstance, this is supposed to be a protected low, right? But this becomes the liquidity. Most times it becomes inducement liquidity, and price will just come and take your stop loss. Meanwhile, on 1 hour, you are seeing complete structure, but you didn't check 4 hour to see that, okay, since I still have this structure, as long as the structure, the sweep and break of structure appears on 4 hour, you must observe liquidity and you must observe candle body break of structure. That's that. So you understand it now, okay? I'm going to share the link for the next maybe 30 minutes and we'll call it a day. Good, good, good. Glad that you understand. So, guys, follow me on Twitter and also check my YouTube channel. Okay, I'll drop the link to my YouTube channel. Subscribe and comment what you'd like us to treat on in other occasions. Well, make sure you follow me on Twitter and engage